Morning, everyone, and welcome back to the Your Money Life podcast. We're on episode 325 of the podcast. So make sure wherever you're listening, do me a favor. You like, subscribe, five-star rate, and review this podcast. We do this every week. This week, we're going to jump right into the market update and give you a little tidbit on what's been happening in the market because there is a lot. So I want to make sure I'm getting everything that we need to see. So, first and foremost, let's jump into what we're seeing in the market for this week and the past week and year to date. We'll pull the picture out as well. Past 5 days were about flat. We had a little dip here. It looks like on the 23rd trading days, and then we are now flat roughly. And the futures market, if you guys get this before the market opens, which more than likely won't, but we're pointing towards a positive opening today, which we'll see if that holds. There's some earnings that we'll talk about that are pretty strong earnings from some tech companies that might be attributing to this positive outlook today for traders. The past month, am I reading this with the past month? We are up over 11% gain in the market in 1 month. Is that correct? Must be because we bounced back from the dip that we saw. Now we're actually at new highs. We bounced back from the dip that we saw and in late March, started in the middle of March to late March, and we are now at new highs. So year to date, if you're looking at it, we're almost at 4% growth, 4% appreciation year to date. And if the market opening holds steady and we close higher today, we'll be above 4% year to date, which again is pretty strong. If you're looking at just the first quarter of trading, that's pretty strong. And on a year basis, up 30%. Again, we climb back. Look at this, pulling this chart out a year. Mid-March, we start dipping, oil rising, fears, geopolitical wars, people start buying, and we are now, as you look at the end of April, at new highs, which again, we said it could be still more volatility. It looks like this maybe correction is done. Is there more volatility going forward? Potentially. There's not even a resolution yet to the war and to the geopolitical unrest. There's still negotiation going on. But the market said they don't care anymore. And we've increased and we are back at new highs. And so again, I knew we would recover as we said we would. The timing on that, we were closer to longer, maybe a week or two longer. But I mean, it's quite incredible the run again the market is having. Um, as you see it, it's a quite incredible run. So let's look at some oil charts and get a sense of what oil is doing. I want to pick a good oil chart for us so we can get a good sense on what oil is doing for us as well. And you're seeing oil prices here. Still a lot of volatility. We're trading on oil pretty high up there. And so that's still a thing. That's going to affect the general economy if we have higher oil prices. You see the national average on gas prices since the start of the war. We're up over it's around 2.92 if I'm not mistaken. Before the war started, that national gas prices for a gallon of gas. Now we're up over $4 on an average basis. I think they're saying someplace in California you'd be paying over six, as that's of course how the averages work. Some places you pay lower, some much higher. But the average has increased, and that's what that 30-40%, right? Like so that's going to affect the general economy for transportation this summer, for everything that, of course, for people spending this summer, for people traveling this summer, and then for companies that transport a lot, for transportation companies and companies that just transport their goods and services. That's going to affect a lot. Airlines as well are saying that these crude oil prices are affecting their margins. So we would want to see that dip and correct for the general good of the economy, to be honest. So that's going to be huge, huge, huge to watch. And again, if we're just thinking about the general market, really, really strong recovery. And again, we were maybe saying it would be a little bit more volatility, but there still will. But this recovery can't be ignored. If people were saying, "Oh, I'm gonna get scared. I'm gonna take things out from their own personal stuff," like that just wasn't the smart move, as we've always said. Speaking of the Fed, the Federal Reserve kept interest rates steady yesterday. So they kept the benchmark funds rate between 3.5 and 3.75, which was widely expected. There, that was what was expected. Um, what was not expected is how deeply divided the vote was. There was 8 members who were against the cut, interest rate cut, and 4 wanted one. And there are different rationales for those different Fed members and why they wanted to cut. So again, they could have the ability to cut interest rates if they feel like inflation is getting better and they want to spur more growth. The meeting was likely Jerome Powell's last. Let's not forget, Jerome Powell is headed out as Fed chair. He will be replaced by Kevin Warsh, if I'm not mistaken. And this was the first time since 1992 that 4 committee members dissented. So this is the first time since 1992 that there was 4 committee members that dissented with what the general majority direction for the Fed members. So, oh man, so they don't see. So some people say that they don't see any more rate cuts this year as a backdrop. It's interesting. I think we will get more, but we'll see. The Fed held rates steady, but there was a historic split since 1992. You have not seen 4 members dissent from the general majority direction. So that's going to be something to watch here. We will. I was under the impression we might see more rate cuts. But we'll see if that actually is what happens. And we were just talking about oil, so let's go back to a little bit more oil. Oil hits a 4-year high on fears of further military action. So oil surged at its highest price of the Iran war before retreating on Thursday following a report that the U.S. is considering new combat operations. So Brent crude, the international benchmark, briefly reached 126 a barrel before dropping to 117. The fluctuations came as Axios reported per anonymous sources that the president, Donald Trump, will be briefed on possible short and powerful strikes designed to bring Iran back to the negotiation table. The last time oil spiked to such levels during Russia's invasion of Ukraine in early 2022. So again, we're seeing that volatility in oil again, which is not good for the general economy for anyone, right? Like there's a lot of, we're not the only ones that use oil, but there's a lot of economic implications that could be seen and will continue to be seen if we still see these elevated prices in oil, man. And that's something that we'll have to keep an eye on as traders are saying that that's a big thing. And also, we may see more again. I mentioned that there will still be issues with the war, and that's it's not settled yet, and that's the truth. It is not settled yet, so we don't know what's going to happen. That's why I see that there could potentially be further volatility that will again subside at some point. But it's just good to note that there could be further volatility going forward. So that's something to note for investors and traders is keeping an eye on oil, and just for your own general use pick cases. That's another thing to note. So we'll keep our eye on that backdrop as that continues to go forward. Let's talk a little bit of AI. We probably will talk AI more than likely once a week because there's so much happening. The US is pushing back on Anthropic's planned Mythos expansion. So the White House doesn't want Anthropic to broaden access to its Mythos AI model over cybersecurity concerns. This is reported by the Wall Street Journal. Anthropic is also being, there's rumored to raising more money, another round at a $900 billion valuation that will pass OpenAI if they do that. And that would be a close to being the first $1 trillion, what is that, the first $1 trillion private company, unicorn? And that's not even unicorn. Unicorn used to be billion, if I'm not mistaken. Now we're talking about trillion. Um, Administrative officials about Mythos is another company of 50, top 50 with current access. Administration officials worry about national security risks as well as diminished capacity for government applications if Anthropic's computing resources are stretched too thin. So they just don't want them to expand access to the Mythos model. So this is interesting. So if Anthropic's computing resources are stretched too thin, again, and this is what I was the note I heard that Anthropic is considering a funding round and evaluation topping 900 billion that would make it more valuable than rival OpenAI. And people don't know the lore of this. It's the leader of Anthropic. He, if I'm not mistaken, was fired by OpenAI and then started his own company. And so him and Sam Altman, who runs OpenAI, don't have a very good relationship. They don't have a good relationship. And Sam Altman's also in a legal battle right now with Elon Musk because Elon Musk was the first one to start OpenAI as a nonprofit. Um, and it's so yeah, there's a lot going on in the AI world, a lot of big money there, a lot going on in the AI world. So we'll have to keep our eye on this. Um, Anthropic recently proposed letting roughly 70 additional companies and organizations use this model, which would have brought the total number of entities with access to about 120. This was people with familiarity with the matter. Administration officials told the company they opposed the move because of concerns about the security. So The administration doesn't want as many companies to have access to this model. They just want to be one of the few people to have it. And Anthropic is trying to broaden the ability of people that want to use it and pay for it. But the administration doesn't want that to happen. It's a powerful model. And so um, they said that may hamper the government's servers and abilities if more people are on it. So this is really interesting. Anthropic and the US government have a tenuous relationship that is going to continue to be tenuous. There's going to be a lot of pushback on different things. It's obvious that that Anthropic has the ability and models that could do things that the government finds really intriguing and useful, but they just want to be able to control the way that it's used, which is interesting. It gets into if that's overreach or not. So that's going to be a battle that's going to be fought for a while. Let's go to big tech earnings, other big tech earnings, other AI companies. Big tech is spending massive on AI. Google's cloud computing unit posted 20 billion in sales, and its consumer AI servers notched their strongest quarter to date. Meta, however, doesn't have as much to show for its spending free, even after raising its full year capital expenditures to 145 billion. So Google had a really strong earnings. Let's talk more about it here. There were strong earnings from Google. Actually, let's dive in if we have more snippet here on the earnings. So Caterpillar, let's go through earnings a little bit. Caterpillar shares popped on better than expected figures. Amazon also climbed more than 2%. Meta Platforms and Microsoft lost 8 and 2% respectively. Meta shares were weighed by the company's latest capital expenditure guidance. So Meta was saying we're going to spend a lot more on AI and capital expenditures, and there went down and after hours trading. So another good note there. We don't have the Google's numbers yet, but Google had strong earnings. Are their after earnings, after hours trading increased. They grew, was it 60%, 62% on the cloud side, which they're showing a lot of strong growth and a lot of great ability to, one, they have the ability to service a lot in the AI world. So they just actually announced their own chips to rival NVIDIA. And then, of course, they have the platform, the chat for the consumers, and then the cloud. They just have ability to really reach into every segment of AI, which is really what you want, right? The ability to do that. So we'll keep our eye on that going forward. And here's their earnings, actually. Let's dive into it in more detail. They blew past estimates as cloud revenue jumped 63%. This is Alphabet we're talking about. Alphabet posted first quarter results that exceeded analyst expectations Wednesday, boosted by strong cloud growth in its Gemini artificial intelligence models. The Google's parent revenue climbed 22% to 109 billion, outpacing Wall Street's 107 billion estimate. Cloud revenue came in at 20 billion, and the cloud unit's backlog, which represents future revenue, almost doubled amid surging demand for cloud-based AI services. Alphabet has poured billions into AI infrastructure as it competes with Anthropic and OpenAI in its AI race. So again, these companies are just competing. It's going to be winner takes a big chunk, but there will be multiple winners. And you see a piece blurb from Sundar on LinkedIn, the CEO, about what's going on, but they're just increasing paid subscriptions, 350 million. Waymo, you forgot they still owed Waymo, fully autonomous rides per week, 500,000. Just a business that's in a bunch of businesses. So you're going to see that growth, and that's potentially what's helping the market buoy the market today, potentially as we see it trading a little bit higher in the Dow, S&P flat, and Nasdaq about a little bit lower to flat. So as we now the market has opened. So let's jump into a little bit different stuff. Let's talk about personal finance question of the week. What do we got? What do we have in the personal finance question of the week? Prediction markets. You guys have seen it. Prediction markets are actually doing super strong right now, even better some cases than betting markets. But let's look at it. Prediction market, poly market. But on the prediction market, poly market, researchers flagged about 210,000 trades as potentially involving non-public information. By their estimate, how much did users on the losing side of these trades lose? So actually think about prediction markets versus betting markets. Prediction markets are actually interesting because you're actually not trading or betting against the house. You're betting against, in most cases, someone else, right? Like someone else takes the opposite side of your thoughts. So like, hey, tomorrow's it going to rain? You say yes, someone else says no. That's the trade. And the betting markets are actually betting against the house. They're setting lines and setting probabilities and use mathematics, and they're experts and models to set probabilities of what something happened. They have cash outlays. It's pretty much like a weird way of like an insurance company, right? They have cash outlays and they will pay out if something happens, but they're hoping it doesn't, and you've just paid into them, right? Like a premium, a donation, as they call it. And so in this case, in the prediction markets, though, you're actually betting against someone else. And so that's crazy. If someone's using non-public information, that's just like really interesting in how it's hurtful to the users, especially the people that are losing. So in this, what percentage, but how bad there is, how much do the users on the losing side of the traders? It's going to be a lot of money. An estimated 143 million since 2024. So, um, when someone makes a bet of money in trade, where does the money come from? If you found out, well, these are questions. So, the informed trading we document is not in the aggregate trivial 143 million. It is a conservative lower bound estimate of the anomalous profits extracted over 2 years from a single platform. These profits represent transfers from uniform retail participants to those who have access to non-material public information. So they're pretty much saying we just took one platform and we did a small study and we had a lower bound estimate that 143 million transferred from the losers to the winners, and the winners potentially had non-public information. That's pretty big, right? And that's something that's going on, and you're going to hear more about it. How this is going to get regulated, we'll have to find out, but that's going to be something that's going to pop up more in the future. Another question of the day: beyond the tuition and housing, how much does the average family spend to get one student ready for college each fall? I'm going to say 5 to 10K. The answer is $1,325 per student, like electronics, dorm furnishings, clothes, and food. All right. Yeah, that makes sense. Clothes and food. Yeah, okay, okay. And they're seeing here back to school spending is rising every year, as you see in this chart, or I see in this chart. Interesting. 39.8 billion, 39 billion for K through 12, and college 88 billion. We're spending on your kids. All right. Folks, this is the Your Money Lab podcast. We do this every week. Make sure you like, subscribe, 5-star rate and review. We will see you next